Biden blasts oil refiners for report high fuel expenses. Profits. Washington. U.S. President Joe Biden on Wednesday demanded oil refining groups explain why they're no longer placing extra gas on the market as they acquire Providence income, sharply escalating his rhetoric against industry as he faces stress over rising fees. Biden wrote to executives from Marathon Petroleum Corp. (NYSE), MPC, Valero Energy Corp. (NYSE), VLO, and ExxonMobil Corp. (NYSE), XOM, and complained they had cut lower back on oil refining to pad their earnings, in line with a copy of the letter visible by using. The letter became also dispatched to Phillips 66 NYSE, PSX, Chevron Corp NYSE, CVX, BP NYSE, BP, and Shell LON, RDSA, a White House official, who declined to be identified, informed. At a time of war, refinery profit margins nicely above regular being handed directly onto American families are not acceptable, Biden wrote, including the shortage of refining become riding gas prices up quicker than oil fees. Biden stated the enterprise's lack of movement as blunting the administration's tries to offset the impact of Russia's invasion of Ukraine, which include releases from the U.S. oil reserves and adding greater cheaper ethanol to fuel. Meanwhile, power agencies are taking part in bumper profits as the invasion has delivered to a supply squeeze which has pushed crude fees above $100 a barrel, and as gas demand has remained sturdy, no matter high fuel charges. White House spokesperson Karine Jean-Pierre on Wednesday went some distance to mention refiners have a patriotic obligation to growth supplies and reduce client prices. "We are calling on them to do the right thing, to be patriots here," she advised reporters. U.S. refining capability peaked in April 2020 at simply below 19 million barrels consistent with day, BPD, as refiners closed numerous unprofitable centers for the duration of the COVID-19 pandemic. As of March, refining ability turned into 17.9 million BPD, however there had been different closures announced because U.S. refiners are strolling at near-peak stages to manner gasoline currently at 94% of potential and say there is little they can do to quick satisfy Biden's needs. "Our refineries are running full out," Bruce Niemeyer, company vice chairman of strategy and sustainability at Chevron, said on the sidelines of a strength transition conference on Tuesday, earlier than the letter become made public. Shell is generating at potential and searching at alternatives to growth oil and fuel production, a spokesperson stated. Exxon, which became the focus of the president's ire against oil corporations closing week, has invested to expand its refining potential by means of 250,000 barrels of oil per day, the equal of a medium-sized refinery, said spokesman Todd Spittler. The administration inside the brief term may want to raise the Jones Act provisions that force domestic shippers to use U.S.-flagged vessels that employ union labor, or raise policies that prohibit the usage of less expensive, smog-inflicting additives in summer season blends of fuel, Spittler stated. Phillips 66, Valero and Marathon Petroleum said they might paintings with the administration. Chevron and BP did not without delay comment. Inflation woes. Biden has been intensifying attacks towards oil businesses as gasoline pump charges race to record highs above $5 in keeping with gallon and inflation surges to a 40-year record. Privately, White House officials had been achieving out to refiners to inquire approximately idled plant life and spare ability and whether or not there are different approaches to increase gas supply, according to two sources familiar with the discussions. Rising gasoline expenses have helped power abruptly continual customer rate inflation and voter anger earlier than November. 8 midterm elections wherein Biden's Democratic Party is defending its manage of Congress. Biden has attributed growing oil prices ordinarily to U.S.-led sanctions that took Russian power materials off the worldwide marketplace. But he has additionally taken the fight to foremost oil organizations that are driving growing strength expenses to report profits, and giving those earnings to investors in place of spending on new drilling and refining ability. Exxon made extra money than God this year, Biden said closing week, relating to the major's first area income doubling from the preceding years to $5.48 billion. Exxon Spittler said the top U.S. manufacturer has invested more than $50 billion during the last 5 years that led to an almost 50% boom in U.S. oil output. U.S. Energy Secretary Jennifer Granholm plans to host an emergency assembly on how refiners can reply to higher expenses, Biden said, inquiring for a response from the oil groups ahead. Biden said they should provide concrete ideas to growth oil refining along with a reason behind why they may have cut such capability within the last 2 years.